Welcome, everybody, to another episode of the AgView Pitch. We're heading into a new marketing week, November 3rd through the 7th, the first week of November, coming off of Halloween, and we're lucky enough with us today to have Jim McCormick. Jim, how's it going?
I'm doing quite well, Chris. And yes, we're moving into November. And I tell you what, the Bulls have got to feel pretty good. Very strong closes to the month of October on monthly charts. So, the technical picture is looking pretty good.
Yeah, we'll take it, won't we? I know we're going to get into this, but there's been a lot of news in this past week that we want to come back to. But before we get to that, I want to talk just a little bit about what you're hearing as guys continue with harvest. A lot of people are kind of wrapping it up. There's still some people in the heat of it. I'm like I told you before we started recording here. We're getting to the tail end of it, to the end of it where the bends are getting really full and you get to do a little climbing. That's what I'm doing here today. But I guess I'm curious from what you're hearing from your clients. Yields on corn were maybe not quite as good as expected from what I'm hearing, and beans were better than expected. Are you hearing anything different than that, or some kind of variability? What are you hearing?
I think what you're hearing is what we're hearing for the most part, Chris. I think, we obviously haven't had a government report as the government's shut down, but I would argue or believe, as we do finally get a report, I think you're going to find the bean yields very close to where the government's at. I don't look for much reduction. I would be very shocked to not see the corn yield come down simply because, especially in parts of Iowa, that crop did tail off a little bit more than what I think some people were anticipating. Now, some of it is going to be offset with parts of the northern plains. There's some places up here in northern Illinois that had just record yields for both corn and beans. But as a whole, I would argue that corn, that late heat, maybe did a little bit of damage to the corn. The disease pressure definitely had an impact on it. And like I said, I would expect that corn yield to come down a little bit when we finally do get the numbers.
When we have that conversation with some of the clients, like you said, in some of the areas where the corn yields were really good, like there's some pockets in southern Minnesota too that's just knocking it out of the park. And I think they're surprised when it's like, well, no, the southern rust in the middle part of Iowa really hammered some things. And I think it's going to be interesting if the government gets back to work at some point here and we get some information. I don't know. I'm still in that 183, 184 camp on corn. Are you somewhere there? I mean, it's still a really good crop, but
I'm right there. Chris, I think it could slip to 182, but I'm not going to argue over a bushel.
yeah.
I mean, the reality is this. I think it comes down to that 182, your number 183, 184, 182, 183. The fact of the matter is the demand side on the feed, I think, is way over. It's too big. When they got the quarterly grain stock report here a couple months ago, it suggested the feed number was 170 million too high. So when you look at the old crop feed number compared to the current feed number, which has not been revised because of the government shutdown, there's about a 600 million bushel difference. And unless we open that border to the cattle very, very quick, that feed number is going to have to come down. And I think what you'll eventually see is they'll walk the yield down, they'll walk the feed number down. And when it's all said and done, your carryout's still going to be staring somewhere around a 2 billion plus carryout, is unfortunately.
Mm-hmm. What about the soybean side of things? I don't see them trimming the yield there. Any do you, or what's your thought?
I think if it is, it's going to be a very minor trend. I actually wouldn't be surprised if it actually goes up a little bit
Yeah.
because I think the one thing that surprised a lot of people is the argument was, well, the later beans will tail off, because of the dry August. In a lot of places, it just did not tail off, or if it did, it didn't tail off near to the extent that I think a lot of people feared. So I think the bean yield is going to stay the same. Now, on the balance sheet for the beans, now obviously we had a big China deal here this past week. China came in and said they're going to import 12 million metric tons. I would say that's positive. I wouldn't say it's great because that's less than half of what we thought they were going to import before the trade war started. But if you take what China committed to compared to what we've already sold, the USDA's demand, I think, looks relatively accurate. So I think the balance sheet with a projected carryout right around 300, right at this point, my guess is going to be relatively accurate.
Mm-hmm. Interesting. So let's use the soybean conversation as a transition over to some of the news we've heard last week, and which is, finally, we've got a quote unquote a trade deal, or as Brooke Rollins has said, it's kind of we're setting a floor. I think there's still some. I'm trying to think of the right adjective here. There's some concerned that, is it really going to happen? Feels like we can sometimes trust China about as far as we could throw the entire country. One time, sometimes they say something and then something else happens. What's your thought? I mean, has it, we've seen what, $1 up in the market since the low to where we got to. Is that sustainable? Do we have more upside potential? What are you guys all thinking?
Okay, well, let's start with the trade deal. I think it's a very good deal. I mean, when you get commitments from China at 25 million, that is a very positive for the American producer, and he should be happy with it. But I also think he's got to be realistic as well for two reasons. First one, 25 million metric tons is good, but if you take the past 4 years average, they're buying 27 million metric tons a year. So it's not a game changer. I would argue it's status quo, but it is demand, and that I think you can count that is optimistic. But can you count on it, Chris? You're right. I mean, China has a history of not following through with its commitments. It didn't follow through with the phase one deal. And one thing I found interesting about the deal that was cut last week between President Trump and President Xi, the bean part of the deal they really played up was a 3-year deal, 3.5-year deal, I guess you say, this year and then the next 3 years. But what I found very concerning, the rare earth portion of the deal, which is probably the most critical portion of the deal right now for our US economy, was only a 1-year deal. So if this rare earth deal falls apart, per se, in the next year, I gotta unfortunately believe that the bean purchase will fall to the sidelines as well. And I found it kind of interesting how one was played up for 3 years and the other one was played up for one. And that gives me a little bit of concern. The other thing we do have to kind of pay attention to here as we move into November, the Supreme Court is about ready to have a hearing on if all these tariffs that President Trump has put on without Congress's approval, technically, did he overstep his presidential powers? And there is about a 50-50 odds that I've seen that he could get ruled against, which means all that money we've collected, it'd be chaos, would have to go back to the people who bought it, the importers, but it would also put all these trade deals we've worked out probably back up in the air. So, everything's far from uncertain, I guess is what I'm saying.
Well, that's just it. I mean, it's hard for a market to stabilize or to do anything very positive when there's a lot of uncertainty, right? I mean, that's the concerning thing for me. Let's stay on beans for a second. I got another question for you too. So, with our client base, we kind of look at where producers are at with what percentages sold they are and things through Profit Manager, and it looks like there was a lot of beans sold, not as many corn, but that's kind of the typical thing. Not as many beans as normal, not even close, but still more beans percentage wise than corn, significantly more. So our clients are somewhere in that, with early data, it looks like somewhere in that 50 to 60% sold and at a pretty low price. And I was just looking, we finally got our October price came in for the insurance indemnity, 421 on corn and 1027 for soybeans. That's far from guys making any money. And I've got clients telling me they're losing $200 an acre on soybeans, and guys, with decent yields, and other people telling me, maybe $100 an acre. But either way, it's pretty significant. For those who have sold a high percentage of their beans, do you just stick a fork in it and call it good? Or those who have got them all sold, or is there any practical things that really make sense? Or do you just call it a day and hope there's a quote unquote MFP or something to come yet for those that have marketed either a percentage or all of the soybeans?
Okay.
Tough question.
All right. I'm going to start. I'm going to have one other point. Let's say if you're a producer who hasn't sold a lot of beans, okay? Congratulations. You held off. You got a dollar rally. The basis has snapped back. Up until this week, we haven't had front month beans get over $11, okay, for the whole calendar year. Your old crop carryout was around 330. Your new crop carryout's been projected around 300 since May. And like I said, if you look at the balance sheet with the dollars we got, I think that carryout's going to stay at 300. So when you look at $11 beans, the market tells me you need to sell these beans and reward this rally if you're not a producer, if you're lucky not to have sold early, okay? Because the economic modeling would argue there's no reason for beans to hang above $11 at this point in time.
Mm-hmm.
Okay. Now, to answer your question, do you put a fork in it if you haven't sold it? I would recommend holding back a little bit. We left a massive gap on the chart coming into this past week when over the weekend, Secretary Bessent said we had that great trade deal and the market reacted positively to it. Like I said, we haven't changed the balance sheet any from where we were the last 60 days when it's all said and done. So I think the froth of the market will pull back. But here's what's interesting, Chris. When you take beans above $11 on a chart, you tend not to stay at $11. You tend to either be going on your way from 10 to 11 to 12 or on your way back down. In the last 5 times we went up through 11, we continued higher. But what's interesting is almost every one of those times you went through 11 or right to near 11, then you tended to pull back a little bit, like get up to 11, pull back for a running start, then you made another move higher. Okay. I would recommend if you're a producer, haven't sold the beans, sell some of the beans. And definitely, if we could get a pullback into filling the gap or close to that gap we left, then you might want to come in here and start buying some further out options, March or May. Because if you see any kind of a hiccup in South America, I think you could easily see these beans push to 12 because of the way we trade today. So much of the trade is momentum and money flow. Chris, you realize we have $2.2 trillion, the M2 money supply is at all-time highs. So there's massive amounts of money just sloshing around looking for a place to trade. And you can see how the gold market reacted this year, the cattle market, all that, a lot of that was just fun money plowing it up. So if you gave the bean market a reason to rally, you could go to 12. History suggests we could go to 12. The question is, can you get that impetus to do it? And it may be the South American having any kind of a hiccup.
Mm-hmm. Yeah, that leads me to a final question on beans, and I'm going to shift over to corn as we get closer to wrapping up. But on the soybean side of things, on 2026, then, you look at that NOV 26, and we got through $11 for a lot of producers. That's, this year would have been a really good place to start, and I think people look at that and think, I don't know, maybe I should plug a little in. Do you plug a little in there? Do you just hold off based on what we know now from this last week, and maybe there's more upside potential than downside risk? Or what's your thought there on new crop?
I think you could plug some in. I mean, I've made the argument, Chris, to some clients, if you sold 10% of $11 beans and that's your worst sell, congratulations, you're going to be profitable more than likely. Mm-hmm. Or you might consider coming in there and doing like a buy $11 put, sell a $10 put, sell a $12 call. You could do that a year out, buys you a lot of time, says, hey, worst case, you're getting $11 beans, best case, you're getting 12. Mm-hmm. But it's a situation where we still, like I said, there's a very good setup for this market to move to 12. But this China deal, let's face it, the last 90 days shows you anything. What we know today can switch tomorrow depending on who follows through with what deal. So I think if you get to a situation where you can start locking in some profit or build a plan that if that's your worst sell, you can make money, it's still a pragmatic thing to do because we really don't know what's going to happen. You mentioned that MFP payment. I don't know. It's going to be interesting to see what we hear coming out of Washington because that payment talk was really, really intense at 10 when beans are trading at 10. And now you're trading at calendar year highs. Mm-hmm. Is that talk going to move away? I hope not, because like you said, a lot of people were forced to sell beans very cheap because of lack of storage. Mm-hmm. But it's a situation that I don't think it's a guarantee, unfortunately.
Yeah. I know Paul Neiffer was talking about the idea of a bridge compensation note or a bridge payment of some sort that was more comprehensive across all commodities. So like you said, I mean, all it is conjecture on all of our parts anyway, until the government wakes up again and decides to come back to work, I guess. So the last thing I want to hit you up on is on corn. It's just like I was telling you before we started recording, I'm topping off bins and we're trying to stash stuff away as best we can. But on the same token, you got to sell things. And I've noticed the basis in certain areas where the yields are really good that we just talked about a bit ago, the basis has not been as attractive because people are having to move some of it. And conversely, in other areas, the basis has improved some. Talk to me a little bit, or talk to the listeners a little bit about in a couple of weeks when that stuff does get put away, we should see some basis strength across the board at that point, shouldn't we? Or talk a little bit about what you're anticipating on the basis side of things, especially for corn.
I would expect corn basis to improve. You saw how the bean basis improved really
Yeah.
dramatically once the harvest was done. I think you'll see the same thing in the corn. I think the one thing the commercial market hasn't quite got its hands on is how well producers can keep grain off the market. These bagging systems seems to have really changed the game
Hmm.
where producers can essentially instantaneously get on-farm storage. And I think, they're going to hold as much grain off as you can. And I would look for that to improve. I am a little bit leery potentially about how this basis play is going to play now. It's been, the export market, Chris, has been red hot because that's with the lack of China business. The river market was trying to push as much corn down to keep the barges loaded. Well, now that we've got this China deal, what we've seen is the bean basis is essentially going to probably firm up as they try to bring beans to market to fill the demand for China. On the other hand, the basis in South America has collapsed in the beans, so we might lose some bean basis there. But in the meantime, our corn prices basis is firmed on the world and it is getting cheaper. We're not quite as competitive, and we're not, maybe sometimes we actually lost market share to South America and the Ukraine. So if you see these basis pops, I think you got to take advantage of it. The corn situation is really interesting on the chart. Early in the summer, we had a head and shoulder top, and the neckline was right around 435. This fall, we've put in a head and shoulder bottom. Interesting enough, that headline, that neckline's right around 435. If you can get this market to really break above that 435 level, it projects you back up toward that 470, 475 level. And the question is, can you get that fundamental push to get you there so the technical picture does look good? But you got to be a little bit cognizant, though. Also, we had an old crop carryout that we thought was 1.3. It ended up being 1.5 billion. Like we mentioned earlier in the discussion, we're looking for the carryout to be around 2 billion. Spot month corn hasn't been able to be over 450 corn since 4th of July weekend, pretty much. Same thing for D's corn. So if you look at it without that fundamental story of maybe a problem in South America or demand, you got to be careful on the other, be getting too bulled up on corn because we've been in a sideways market for the last several months. The 100-day, the 50-day are all converging. That could continue. And, this head and shoulder bottom could be a head fake out, and we could just continue to trade in a sideways range. So if you've got a lot of corn unpriced, Chris, you might consider going out and buying like a July put or maybe a July put spread, buy like an at the money put, sell like an out of the money put, maybe, buy the 450 put, sell like a $4 put, and maybe sell an out of the money call that at least lock in the carry in case we just continue in a sideways range. Because like I said, demand's going to be the key.
Hmm. And to me, just looking at least even locally and talking to a few clients during this past week, when we got that market bump, a bunch of farmers started selling. It didn't let the market go too far. It went a little ways, and it was met with all this selling pressure. And then at the same time, basis got taken away, especially in those areas where those producers had to sell or took that opportunity to sell. Kind of that double whammy. The basis goes away, and your upside potential gets limited really quick. And so I think to your point, I think, it's something to pay attention to. I also like the idea of, just putting some offers in and having having a plan sort of in place so that things can happen when you're not watching. Because as farmers, we have a tendency to get distracted on other stuff once in a while, as I'm sure you're aware of.
Oh, there's no doubt about it. I think, if you look at what's happened here, you've got to get your orders working because a
Mm.
lot of these movement happens at night. And if you, real
Yeah.
quick, I know we're pressed for time, but what's interesting, Chris, if you look at where corn bottomed, it bottomed mid-month, October 15th. The soybeans bottomed on October 15th, pretty much. Meal, which we haven't talked about, has exploded. It erased 10 months worth of selling in about 14 trading days. It bottomed mid-month. Wheat, it bottomed mid-month. But more importantly, interesting, the cattle market topped mid-month. The feeder cattle topped mid-month. The gold market topped mid-month. The silver market topped mid-month. The copper market topped mid-month, as well as the platinum. What did these all have in common? The funds are massively short the grain market. They were massively long the livestock as well as the metals. And to me, it is not a coincidence that the metals and the meats broke and the grain markets all rallied. I think that was a fun movement as well as the storylines we've talked about. And you never know when it's going to happen. So you want to have your orders working because you never know where this money's going to go. Like I said, there's $2 trillion sloshing around the world economy, and a lot of it's looking for a place to trade. And it's just where does that money land? And wherever it lands, it could really get exciting.
Hmm. Yeah, that's one of my takeaways from your message, I think, is keep an eye on what the funds are doing, because that money does and is what moves the market and keeps the snowball rolling too, for sure.
Well, and that's it. And people have asked, some of my clients said, well, why do you think they did it now? I said, I think it's, there's a politician out of Chicago, Rahm Emanuel, you might remember that name.
Yep.
He's known for making the comment, never let a good crisis go to waste. I feel like the fund manager just said, hey, the government's closed. Let's make some adjustments on our positions while essentially we're the trades in the dark. We're really
Yeah.
just kind of guessing where the fund positions are. So I think when the government does open back up, we're going to be shocked about how small that grain position is, and also how small that, how much reduction we saw on the livestock, where the funds just took advantage of the cloak of darkness of the government shutdown.
Right, right. All right. Well, this has been a great conversation. I'm going to give you the last word. I'm going to give you 60 seconds to tell the producers what they need to do in the next 2 weeks.
The next 2 weeks, I think you had to be prepared for a little bit of volatility. I think the bean market could go back down and try to correct and fill that gap. But like I mentioned, I would encourage people to consider me. If you've sold a lot of grain, you might want to come in and try to buy that gap. Because like I said, history would argue if you give them the fundamental story, we're going to run to 12. On the corn, there is a seasonal bias. You sell it early in the month, it tends to break into the latter part of the month. And if you got to read on some grain you sold cheap, maybe I look to buy that third of the week month, that seasonal buy, because once the funds, they decide that there's a problem in South America, we're going to go off to the races.
Awesome. This has been a great conversation as usual. If people want to get a hold of you, I mean, you talked about some considerations and some take home things that people need to be thinking about. What's the best way to reach you besides right there behind you, agmarket.net, or is that the best route?
That's the best route. And the other way to do it, my last, Jay, my first name, Jim, J McCormick at agmarket.net. Send me an email.
Awesome. That sounds good. Hey, Jim, I really appreciate it. I'm going to get you back again here in a couple of weeks, and we'll talk about what happened after harvest and see how this Trump trade deal is working out.
I appreciate it. And for the guys out there, Chris, including yourself, have a safe final leg of harvest.
All right. Thanks a lot. And same thing from my point too. You guys get rest. I know that's one of the things I struggle with once in a while too, is being safe out there. So with that said, thanks everybody. We'll catch you again next time on the AgView Pitch.